You are about to hand over a literal fortune to the ATO, and you probably do not even realize it. Right now, as you sit there, the clock is ticking toward the most expensive midnight of your financial life. If you are over 45 and your super balance is sitting in a default industry fund like AustralianSuper or Hostplus without a surgical tax strategy, you are essentially volunteering to pay for the government's next infrastructure project with your retirement dreams. Welcome to Aussie Super Secrets. Today, we're exposing the urgent June countdown strategy that can secure a $12,450 saving before you even think about filing your next tax return. We are diving deep into the new $30,000 concessional cap and how to exploit the Stage 3 tax cuts to keep your wealth exactly where it belongs. In your pocket. At the end of this video, I will reveal the hidden Division 293 trap that is currently being set for every high earner in the country, and how one simple form can neutralize it. Do not let the ATO win by default. But before we sharpen our scalpels and perform surgery on your tax bill, we must cover the essentials. This video contains general information only and does not constitute personal financial, taxation, or legal advice. You should always seek independent advice from a qualified professional, such as a licensed financial advisor or accountant, before making any investment decisions. Let us talk about the $30,000 line in the sand. For the 2025 to 26 financial year, the concessional contribution cap has officially indexed up to $30,000. This is your golden ticket. If you are earning $190,000 or more, you are sitting in the top 45% marginal tax bracket. Every dollar you earn above that threshold is being cannibalized by the taxman. But when you divert that income into your super through a salary sacrifice arrangement, that money is only taxed at a flat 15% within the fund. Do the math. That is a 30% instant win on every single dollar you pivot away from the ATO. But what happens if you have already hit your limit this year? That is where most people stop. But that is exactly where the wealthy keep going. But do you know the absolute worst thing the ATO can do to you if you mess up these dates? We will see that in just a second because the penalties will make your eyes water. Let us look at the catch-up play. If your total superannuation balance, or TSB, was under $500,000 on the 30th of June last year, you have access to a secret vault of tax deductions. You can actually carry forward your unused concessional caps from the last 5 years. Think about Sarah. Sarah is a senior consultant earning $220,000. She has been busy and has not looked at her super for years. She has over $60,000 in unused caps sitting there, gathering dust. By making a massive personal deductible contribution this June, she could potentially wipe out her entire tax bill for the top bracket. That is tens of thousands of dollars in tax savings, all while boosting her balance in a high-performing fund like ART. But wait, there is a massive obstacle standing in your way, and it is called the BPAY death trap. Listen closely because this ruins thousands of tax returns every single year. Most Australians think that if they hit send on their bank transfer on the 30th of June, they are safe. Wrong. The law is crystal clear. The money must be received by your fund to count for this financial year. BPAY and EFT transfers can take 3 to 5 business days to clear through the banking system. If that cash lands on the 1st of July, your $12,000 deduction is gone. It vanishes. You cannot claim it until next year, and by then, the rules might have changed. You need to act by the 23rd of June at the very latest to ensure your industry fund processes the contribution in time. Are you starting to see how much is at stake? If this is making your head spin, just wait until we look at the non-concessional limits. But before we go further, remember that this is general information only and does not constitute personal financial, taxation, or legal advice. Always consult a registered professional before making major moves with your capital. Now, let us talk about the bring forward rule for those with serious capital to protect. If you have a windfall or a large cash reserve outside of super, you can inject up to $360,000 into your fund in one go. This uses your non-concessional cap of $120,000 and borrows the next 2 years of caps. This is the ultimate asset protection move. Once that money is inside the super environment, it is shielded from high personal tax rates and becomes part of a compounding machine. Whether you are with a retail fund or a major industry player, moving large sums into the 15% tax environment of super is how the rich stay rich in Australia. But here is the cliffhanger. What about the Division 293 tax? If your combined income and super contributions exceed $250,000, the ATO hits you with an extra 15% tax on your contributions. It feels like a punishment for being successful. But here is the secret. You can actually choose to pay this bill from your super fund rather than your take-home pay. This keeps your personal cash flow liquid while using the fund's assets to settle the debt. It is a tactical nuance that separates the amateurs from the pros. We have covered a lot today. From the new $30,000 concessional cap, to the carry-forward rules that allow you to reach back in time and claim massive deductions. We have exposed the BPAY trap that can cost you thousands if you wait until the last minute. And we have looked at how the Stage 3 tax cuts change the math for everyone earning over $135,000. The total impact of these strategies for a high earner. It is the difference between a massive tax bill and a $12,450 refund. That is money for your next property deposit, your kids' school fees, or simply more fuel for your retirement fire. If you found this breakdown valuable, do not let the ATO be the only one who knows your secrets. Our next episode drops this coming Thursday at 7 p.m. and we will be exposing the hidden fees in retail funds that are bleeding balances dry. You cannot afford to miss it. Subscribe to Aussie Super Secrets right now and click that bell icon so you never give the government a cent more than they are legally entitled to. Until next time, keep your balance high and your taxes low. See you in the next one. Disclaimer: the information provided in this video is for general educational purposes only and does not constitute financial, taxation, legal, or home loan advice. It has been prepared without taking into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider its appropriateness and consult with a licensed professional, such as a financial planner or tax agent. Specific results or future performance are not guaranteed. Copyright symbol 2026 Aussie Super Secrets. All rights reserved.